right, good morning. Today's Friday, August 8th. Friday, August 8th. The market just opened up higher. Okay, the market closed yesterday at 1905 and a quarter. Market opened up. We ran up here on the first 3-minute bar, but I believe this market's going to come back down and try to fill that gap. The market right now is at the 38.2% retracement from yesterday's high to yesterday's low. So this market will try to back and fill. I believe it will come back to that exponential moving average. So let's sell it a little higher here. 1909. Let's go 1909 and a half. Yeah, maybe a little higher. That's where we're at now. 1910. Let's see, 1910. Let's put this in here. We'll go 9 3/4 here, right? Let's go 9 1/2, right? Jeez, let's see. Here we go. 1909 and a half. That's where we're looking to get filled. 1909 and a half here in the first 6 minutes of trading. Trying to catch that first downdraft. Okay. Here we go. Just got filled. 1909 and a half. And I'm going to, let's do something here. I want to measure from yesterday's low up to today's high so far, right? Even though we've been open for less than 6 minutes, let's expand this chart out, really take a look at this. Here we go. I am looking at, well, first level here would be right there. Put this on here. This is going to be a quick trade, I believe. I'm looking at least for a retest of the first 3-minute bar low, which is 1907 3/4, and then I'm going to look at this high of 1907 and a half. So right in here, I'm looking for the market to dip right into here. I'll take something off, and then I'll move this to break even. Okay, so let me pause the video. All right, I am back. Market's selling off a little bit. We're almost in my zone where I'll be looking to buy this market on at the market 6. Okay, I'm going to look to buy 6 right in here. Take off $875. Let's see. Come on, a little drop, a little bit more. We'll buy this at the market. Here we go. Boom.
Order filled.
All right, we bought it right down where I thought it would drop to, right? Locked in $800. Closed profits $800 on the first 6. See this? Closed. Right, closed is 450 on 6, and we've got 4 left. So let's take this down 4. Okay, we've got 4 left. Okay, so we've got to be a little patient here. I'm looking for that 38.2 at 1906 and a half, roughly 6 and a half. See if we're going to fill this gap. It closed yesterday at 1905 and a quarter. All right. Let's just watch this for a little bit longer. See, this is a quick trade, pretty much out of the gate. So look at, quite honestly, I'm not going to risk anything on this trade. It's going to be a break even on the remaining 4. Okay, break even. So let's put a buy stop at a 1908 and a half, 1909 and a half rather, right? So now it's break even. Okay, so we've got a break even order on the remainder. So regardless of what happens, if the market comes back up to 1909 and a half, I'll break even on the remaining 4, but I took 6 off with the profit. I'll net out 450 minus a little commission there, so about 430. All right, so I'm still looking for this market to drop a bit further, so I'm going to give it a little bit more time. We're trading at 1907 and a half, and I'm just going to give it a little bit more time here, and then I'll got to exercise a little patience, but I am looking to see if we can fill that gap. Look at, if the market is unable to fill this gap, okay, and we come back up and take out today's high, then there's a good chance we'll stage a rally for at least another hour, if we're able to do that. Okay, now remember this purple line here is the 200 exponential moving average. So why did I sell this? I sold this because yesterday the market, market sold off pretty good. We got an up opening, rallied on that first bar to that 38.2% retracement from here, from yesterday's high. Right? Let's just really crunch this chart so you can't see anything here. Okay. So yesterday's high is right here, and the low is right there. So look at this. Let's bring it back out so we can see those numbers. Look at the 38.2 right there. 38.2 is right there at 1909.5 of the big down move we saw yesterday. Okay, so typically when you get a, the day prior, you get a big down bar, and you gap in the opposite direction and then rally immediately into resistance, you can sell that. And 8 out of 10 times you are going to get that snapback in the direction of the trend from the prior day if it's right out of the gate. Okay, so this is a perfect example of what I'm trying to explain here. Okay, but you want to be quick, right? Because it's right out of the gate. This trade was set up in the first 4 to 5 minutes. We sold it. Okay, our initial catastrophic stop was above that 200 moving average. Market came down to a logical place because you always want to establish support when you're short, potential support to take some profits, go to break even, and that's exactly what I did, right? So I identified this high from the prior day, the 1907.25, right? That was one of my zones, and then the first 3-minute bar low, that area as potential support. So that's why I took off 60% of my position. And so now, now I am still short with the remaining 40% of my position. Okay, now here we go. So let's not be greedy and let's look to go at 9. It closed yesterday at 1905.25, didn't it? 1905.25, right? Closed at 1905.25. Let's put an order in for the remainder at 1905.25, right? Let's go at a half, 1905.5. Right there. Here we go. For the remainder, 1905.5 is what we're looking for. You see that order right there. I got my break even. I got my buy limit right here at 1905.5. Looking for that potential little bounce at the half number rather, at the half, 1905.5. All right. Again, it's all about patience. It's all about waiting for the right setup, and then it's acting on what you see. So on 2 days ago video, you saw that I lost money right out of the gate, but then I came back and reversed it because things had changed. So you need to be dynamic and flexible in your trading.
Order filled.
All right, here you go, folks. Look at that. Beautiful, 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 beautiful. All right, so you can see in this video what we did here. So you learned a lot here in terms of the lesson, the little setup that I showed you, right? Again, big down day yesterday, closed here, gapped up here, ran up, right? Remember, that was a 38.2% retracement from the prior day's high to low after a big sell-off. We had the 200 exponential just above price, right? And we did also identify a key trade zone based on the opening bell income strategy that Craig Hill and I teach, okay? And so what we did was we sold it here. We took profits, the first set of profits, right down in here, moved it to break even, and then took profits right where it closed yesterday, right? So what do we want to do now? We want to take out our remaining, our break-even trade, right? So what are we going to do? Cancel the orders here. Yes, we're going to get that out of the market there. So now we are flat. Now what do we do here? What do? We took out $1,250 in the first 15 minutes of trading. What time is it? 9:43 right now. So nice trade from here down to here and down to here. Right? Who says you need to sit in front of your computer the rest of the day, right? You can do something like this and go play golf or spend time with your family, right? So that's one of the beautiful things about day trading. You do not need to be sitting in front of your screen all day. So I hope this video helps. Watch it over and over again. See exactly what I did and paper trade it. watch these type of trade setups for yourselves as opposed to just jumping right in. So, all right, you have a profitable rest of your day, and I will be back with you on Monday, okay? Have a great day, and have a great weekend. Bye for now.